Austin housing numbers dropped for December 2023 in Austin. They don't look that. Jeremy Knight, the Knight Group, your favorite Austin realtor. Look, these numbers came out. I'm going to go through Nick Shaw's predictions for 2023. Nick Shaw nailed the overall market where most analysts did not. They were anticipating a drop in the overall market. Nick nailed it at 4%. I am actually working to get Nick to come on Real Amigos. If you want Nick, who nailed the predictions for 2023, to come on Real Amigos, drop a comment below, bring Nick on. We're going to go through the Austin housing numbers. We're going to go through Nick's predictions for 2024 and his Austin prediction because it is not as shiny as the 2024 predictions. Also, I want to go through some other information. I have a couple stats for you and I want you to drop in the comments right now. There's one city that saw the largest year-over-year growth around the Austin area. It was at 10%. In the comments below, I want you to drop that city in. So it's a suburb around Austin. So it's not Austin itself. There's also two cities that had the highest original list price to sale price ratio. So I'll give you this. For Austin, in the Austin area, most of them were about 90%. So wherever they listed at and where they ended up at was 90% of the list price. I'll give you a hint. Two of them hit 95%. I'm going to give you those stats at the end of the video. So let's get right into it. So from this article that came out, Lance Lambert wrote this interview with Nick Shaw. Last year, most experts were expecting towards a price drop in homes. However, Nick Shaw from Home LLC had a different take. He predicted a 4% rise in home prices. As it turned out, he hit the nail on the head. The reason behind this is it boiled down to the supply of homes not keeping up with the pace of demand. Shaw's AI analyzed data from as far back as 1970, which helped him anticipate the lock-in effect due to the rise in mortgage rates. Fun fact, by late 2022, about 92% of homeowners were locked in at under 6%, leading to a tight supply in the overall market. Now, here in the Austin market, we did see a lot of inventory, and we're going to get into the inventory for 2024 and my predictions for that as we go forward. So why did his prediction stand out? Shaw's accurate prediction came from a blend of factors: a predicted decrease in demand from home purchases, a tighter supply of inventory, historical market trends, and a focus on mortgage rate stats. Now, you'll go back and remember, there's a lot of analysts that were saying that we were going to say 7% increases, like Realtor.com and all these. And then they started to trickle down until they came down to the point where they said that we weren't going to see any gain in 2023. Nick still said about 4%. He was bullish up to 6%, but 4%. Looking ahead into 2024, Shaw is projecting a 4 to 7% increase in home prices. Why is that? Expected decrease in mortgage rates, which should spike up demand. Meanwhile, the supply of home, particularly new single-family construction, is predicted to drop. Another interesting angle is the impact of unemployment. It's not expected to significantly push up the number of homes on the market, given the strong credit and equity positions of most homeowners. If you remember a past video, I actually just talked about how the unemployment rate in Austin dropped down to 3.3% from a high of 3.6%. Another thing that we talked about in a previous video was about all the new construction being built, how Austin is #1 in the most amount of units being built for new constructions. As we get through this video, I want to talk about inventory going into 2024 and the end of 2024 for the Austin area. Now, a lot of experts are predicting a lot of rate drops. And so this goes into part of his predictions for 2024. Now, listen, with these rate drops, I don't think these rate drops are going to come as fast as people think, because in the Fed notes recently, they actually talked about how in the notes that it wasn't going to be as quick of a drop. In fact, they were having a hard time figuring that out. Let's look at Nick's 2024 prediction. Also, drop your prediction for 2024. And if you haven't already, please drop in which cities you think had the highest sale to list price ratio and which cities saw the most increase, because it's pretty interesting when we look at some of these numbers. So for his analysis on 2024 is centered around the mortgage rate trend and the reaction of homeowners to these changes, the ongoing mismatch between supply and demand, construction patterns, and the role of unemployment in the housing dynamic. For us here in Austin, as well as in markets like Boise, Denver, Shaw maintains a bearish stance consistent with his views since 2022. So basically what he's saying is that he's not expecting Austin to have huge increases. And I've got a lot of data here to back this up, especially when it comes to Zillow's forecast. And what Zillow said in this recent article is that homebuyers are experiencing relief as mortgage rates have fallen from a 23-year high in October. Mortgage rates play a significant role in the determining appreciation and affordability, especially for first-time home buyers. A Zillow survey indicated that 21% of home owners are considering selling their home within the next 3 years. That's up from 15% a year ago. So what's really interesting is Zillow is saying that more buyers are finding it a little more affordable. And look, as we get through the Austin numbers, Austin, yes, is becoming more affordable. Yes, everyone is saying that we need incomes to increase. Well, Walmart just announced that they're actually raising their managers' salaries. And on top of that, we have Tesla saying that they're increasing the pay for production here in the Austin area for their facilities and around the US. So Tesla is the largest manufacturer and the almost largest employer in Austin. So if we see that go up, that may help affordability here in Austin. The other thing that's helping affordability in Austin is that property tax rates and taxes have come down with the new laws that came out from the state. Thank you, state, for that. I still don't think it's enough personally. You drop a comment below. Do you think that this is enough and has gone far enough with the property taxes? Here's also what Zillow had to say, is that the typical value for a U.S. home is $344 in December. But it is interesting because mortgage application volume has increased 10.4% compared to the previous week, according to Mortgage Bankers Association. Seasonally adjusted index for the week ending on January 12th. So we are seeing more buyers jump back in the pool because we saw interest rates drop down to 6.6%. Now they fluctuated back up because the 10-year went up based on some news that there was strong buyers in the Christmas season as far as the economy goes, not buyers in the housing market. And so that is putting up the inflation a little bit. So the 10-year treasury went up. We'll continue to follow that. Hopefully the 10-year treasury drops and drops and drops. But one thing that's really important also to note, especially here in the Austin area, is that we're talking about the overall builder situation. Builder confidence has actually risen according to a recent study. Confidence in the market for newly built single-family homes increased by 7 points to 44%, which is not very confident. So builder confidence is low. Now it's risen 7 points. It was in the 30 percentile range. So it's interesting. Builders are getting a little more excited. And why is that? Because interest rate drops and we have seen more buyers in the pool. Before we talk about what happened in Austin, let me tell you what's happening right now in the market. What I am seeing with our buyer pool. Oh, by the way, did you figure out what city it was yet? We're going to get to that in the city with the highest percent. Drop that comment below. But what I'm seeing right now with the buyer pool is that buyers under 500 are out in strong mass right now. Properties in the 300 range, 400 range here in the Austin area are going pretty quickly. We've actually had a couple clients write offers and got into multiple offers as of right now. So that's what's happening as of January. I don't predict that we're going to see a huge rush of buyers like we see normally, and that's partly to do with some of the information I'm about to share with you. So number one, I hate that they continue to talk about Austin as in the MSA, because if we look at the MSA for December, it was actually down 1%. One thing I want to note is that the city of Austin was down 1% as well. What's interesting about this 1% year over year decline, so we're now at 511 as the median, and for the Austin MSA, we're at 443. So we're getting a lot closer to that affordable range or the national average at 334, around there. What's interesting about December is we saw a lot of people pull their homes off the market like we typically do. The months of inventory dropped down to 3% both in the MSA, which is the 5 counties around Austin, and to 3% in the Austin numbers. Now, when we talk about the MSA, we talk about 5 counties: Caldwell, Travis County, Hayes, Williamson, Bastrop. We look at Bastrop is down 3% year over year. If we look at Caldwell County, it's up 2%. Surprisingly up 2%. But if we look at Hayes, it's down 5%. See where I'm going with this? Williamson County is down 2%. Guess who's up almost 2.5%? Travis County. I did the numbers on this. Travis County, the median 527. Travis County, which is Austin, is actually seeing growth. Jeremy was actually right. At the end of last year, when I made my predictions for this year, I said, based on what I'm seeing, we could see Austin positive or completely flat. But I didn't say real positive. Well, Travis County is actually up 2% year over year. So that's pretty interesting. But here's what really concerns me going into this year. If you're a buyer or seller right now, looking to buy or sell in this market, here's what you need to hear. If you are a buyer, I would be still trying to get really good deals and negotiate. And why is that? Is that inventory. So as I look at the inventory, we are starting out January at a higher inventory rate because December, our inventory was at 7,700 units in the MSA. Last year when we ended December, it was just under 7,500. So we have a little bit more inventory there. We look at the just specific Austin inventory. Austin is starting out at almost 2,200 units compared to just under 1,800 units last year. So we have more inventory. Again, I gave a stat the other day, 40% of the homes on the market right now in Austin are new construction. If you didn't see that video, I'll link it right here. That was from last week. 65% of the homes on the market right now are vacant. So if I'm a buyer, I'm negotiating heavily. If I'm a seller getting my home on the market, I am pricing my home correctly, because the reality is, as of December, 90% was the percent most the way around the market. If you listed your home at $500,000, typically it was selling at 90% of the list value. So it was actually well below. When the market was hot, we were seeing homes sell at 105, 106%, and now it is much lower. So the inventory is a big concern for me, as we have more units going on the market as of today than we did last year. Now, let's get to the question that you answered. If you have an answer, you should answer it. The ones that saw the highest sale price to list price ratio were Cedar Park and Hutto. If you got that right in the comment, you got one of those right, 95%. Interestingly enough, I did a lot of videos on Hutto last year talking about Hutto and the growth of Hutto. That's where people are going. Hutto, Cedar Park, still Georgetown was up 10% year over year. But if we're looking at the overall market, yeah, Austin is down from the peak. In fact, there's this article right here talking about Austin's down from the peak 13.9%. So you have that. But what's also interesting is that this chart right here actually shows that more investors are coming back in the market. If we look at Q1 of 2022 compared to Q4 of 2023, we were at a decrease of 0.6, and now we're at 1.1 according to this. So Austin's actually in the middle of where people are investing. People are pulling out of San Francisco, San Jose, LA, San Diego, and Sacramento, and they're going back to Austin. Detroit is actually above Austin on this list, but they're looking at Milwaukee and other places. So Austin does have a bright future. I am going to bring Nick Shaw on. I want to talk with him. You drop a comment below. What do you think 2024 has to offer for the Austin market? We'll hear from you in the next video.